GM Breweries 43rd AGM spotlights strong margin recovery and zero debt foundation, board announces 9 dividend. Synopsis: GM Breweries held its 43rd AGM on May 28, 2026, approving FY26 financial results, declaring a final dividend of Rs 9 per share, and formalizing a 5-year appointment for whole-time director Kiran Parashar. Behind the routine AGM disclosures lies a fundamentally strong, completely debt-free business that the market is pricing at a steep discount to peers. GM Breweries Limited, Maharashtra's single largest country liquor manufacturer, held its 43rd annual general meeting on May 28, 2026, via video conferencing under the chairmanship of Managing Director Mr. Jimmy Almeida Kashyap. All resolutions were passed with requisite majority. For most investors, an AGM filing is just paperwork, but for GM Breweries, it is worth pausing on what this filing actually reveals about a business that is quietly one of the most overlooked quality compounders in the Indian consumer space. The dividend growing, consistent, and still conservative. The centerpiece resolution at the AGM was the formal confirmation of a final dividend of Rs 9 per equity share for FY26, representing a 90% payout on the face value of Rs 10 across 2,28,46,923 fully paid shares. This continues the company's strong track record of consistent shareholder returns, following a dividend payout of Rs 7.5 per share in FY24 and Rs 9 per share in FY26. At the current share price of around Rs 923, the dividend yield stands at approximately 0.97%, reflecting one of the stronger payout profiles within the listed alcohol sector. However, there is a nuance worth flagging. GM Breweries has averaged a dividend payout ratio of just 11.6% of profits over the last 3 years, meaning it retains the vast majority of its earnings. In FY26 alone, the company earned Rs 157 crore in net profit but paid out roughly Rs 20 crore in dividends. The retained earnings have gone into building a Rs 570 crore investment portfolio on the balance sheet and funding capital expenditure, including Rs 47 crore in capital work in progress as of March 2026. Shareholders at the AGM specifically appreciated the company's investment strategy, and rightly so, since that portfolio generates significant other income that periodically boosts reported profits. The auditor's report carried no qualifications or adverse remarks on the company's financials. FY26 financials: revenue hits record, margins recover sharply. The numbers behind the AGM are genuinely impressive. For FY26, GM Breweries posted full-year revenue of Rs 748 crore, a 17% jump from Rs 637 crore in FY25 and a record high, while operating profit surged to Rs 181 crore from Rs 118 crore, with OPM expanding sharply to 24% from 18%. Net profit for FY26 came in at Rs 157 crore. And full-year EPS reached Rs 68.64, a significant recovery after the dip to Rs 56.48 in FY25. PBT for the full year stood at Rs 205 crore. The quarterly trajectory tells the story even more clearly. Q3 and Q4 FY26 both delivered OPM of 25-26%, a level the company had not consistently achieved since FY16. Revenue crossed Rs 200 crore in both Q3 and Q4 FY26, Rs 202 crore each, making these the 2 highest revenue quarters in the company's history. The chairman acknowledged in his address that this was achieved despite high raw material and packing material prices through most of the year, which makes the margin expansion even more commendable. What makes GM Breweries structurally different? Here is the part that deserves the most investor attention. GM Breweries carries zero debt, borrowings stand at nil, and has maintained this position for over a decade after repaying its last Rs 32 crore of borrowings back in FY16. Its interest coverage ratio is an astronomical 566 times, simply because there is virtually no interest to cover. The current ratio is 1.35 and ROCE is 18%, achieved without any financial leverage whatsoever. Free cash flow averaged a healthy positive over the past several years, though FY26 FCF turned negative at Rs -114 crore due to a large investing outflow reflecting active capital deployment rather than operational weakness, as the company deployed cash from its investment portfolio into capex. The balance sheet has grown steadily from Rs 206 crore in total assets in FY15 to Rs 1,225 crore in FY26, entirely funded through retained earnings. GM Breweries Limited shares were trading at Rs 922.75 on June 22, 2026, up 0.26% intraday, giving the company a market capitalization of Rs 2,108 crore. The stock remains attractively valued at a relatively low PE of 13.41x, with a 52-week range of Rs 666 to Rs 1,329, reinforcing its positioning as a fundamentally strong but still undervalued liquor sector player. GM Breweries Limited, established in 1981 and headquartered in Mumbai, is the single largest manufacturer of country liquor in Maharashtra, commanding substantial market share across the Mumbai, Thane, and Palghar districts. The company manufactures and markets country liquor CL and Indian-made foreign liquor IMFL and is listed on both BSE and NSE under the symbol MBrew. Disclaimer: this article provides stock market news for informational purposes only and should not be construed as investment advice. Readers are encouraged to consult with a qualified financial advisor before making any investment decisions.